Good morning, everyone. Welcome back to my channel. I took a little hiatus, a little break, because I needed to get my mind right. Been working like 50 plus hours a week, and your boy is tired. But I was able to get some rest. I was able to get some sleep, and we are back at it for the one time. Yes, one time. And so, before we start, I just wanted to say, like and subscribe to my channel. We're talking about investing, how to put your best foot forward, how to either invest for either retirement, for be able to be financially free and retire early. The fire movement, how to create a dividend investing portfolio, how to leverage your 401k. We're gonna talk about all that stuff on my channel. But as of today, we're gonna talk about what is going on in the market. What is going on right now? Well, if you seen or been paying attention to what's going on in the stock market, everything is down. Stock market is down. Banks are defaulting. People are at risk of losing their money. We're going to talk about uh, if you've been noticing your 401k or your individual portfolios, you've noticed that the market is down, and the market is down by a lot. So we're gonna talk about what happened. We're also gonna talk about some strategies moving forward of what to do, because uh, it's the strategy, it's the plan to withdraw all of your money, all of your checking account, your savings account, sell all of your stock. Is that's the plan? Uh, is it also, well, it's the plan to uh, take your money and put it underneath your mattress, underneath your couch, and save it for a rainy day, and just say forget the stock market. We're going to talk about all that in this video today. So, starting out, we're going to talk about what happened. Why is the stock market down? So, what happened is that over these past several days, several banks have like defaulted, and with these banks going down, like one of the banks is like a big bank on the West Coast in California, where like crypto companies and a lot of startup companies, uh, you know, utilize this bank for money, and it has defaulted. It has really put a spiral into the Fed, uh, and for like the our government to either just let them fend for themselves, or let them like try to pump money into the system to try to help these banks survive. So right here, as you see, the First Republic Bank is facing a crisis of confidence from investors and customers, as it's set to receive a 30 billion lifeline. So right here, the First Public Bank had defaulted, and when it had defaulted, all the money that people and businesses had with these banks, yes, it's covered by the banking insurance. What is that? The SIPC. Typically, like when you invest like at a certain amount, your money is covered through uh a certain limit with the insurance, and that's what these individuals that if they if they're gonna face losing their money, partial their money if it's under like 250,000, it's insured. But I mean, we all know with insurance, just because you have insurance on your car, insurance on your house, and you may be guaranteed the money that you lost, it takes time. You gotta file claims with the insurance companies, and you got to prove this, and before you even get that money, right? So right here, First Republic was one of the banks that on the verge of defaulting, and then right here it says that also in the aftermath, the Silicon Valley Bank and Signature Bank were also the other two banks that had defaulted as well. And from what I had read, the Silicon Valley Bank was the big bank that a lot of crypto companies and a lot of tech companies had like a lot of their money into on the West Coast, and right here. It says First Republic have large amounts of uninsured deposits above 250,000. Now, remember, I had just stated that um, when you if you have either in your investment accounts or in your checking accounts or saving accounts, if you have um, under 250,000, your money is insured. But any amount that you have in these banks that's over $250,000, it's not insured. So if the bank go under, you won't be able to retrieve that money back because it's these banks only insure up to 250,000 for particular people, individuals. And so right here it says that led to many customers to exit the bank and put their money elsewhere, creating a problem for First Republic. It has borrowed money and sell. So as you know that what banks tend to do is that they take your money and they go and invest your money into whatever to get these large annual returns, and then when it's time for you to like take out large sum of money, like $5,000, $10,000, banks always say that you got to get them notice. You got to get them like 3 day, 4 day notice, and it takes a while for them to give you those large sums of money because they take your money and they invest it, right? And so on their behalf. So that's why like a lot of these people they're seeing the writing on the wall and they're trying to take the money out because any money they have over $250,000, it's at risk of them losing it. And so right here, that's what happened. So basically, uh, SVB, First Republic Bank, and Signature Bank all were on like the verge of like uh, default last week. Like they were defaulted, and like the government is trying to come and say and trying to save them because if not, it's going to be some cause this huge domino. Which I mean, they say that we're not in a recession, but we kind of are in a recession. And so as you see right here, as you see right here, from the results of those three banks on the verge of defaulting, losing money, losing customers, losing confidence, and investing into that bank has caused a spiral into the market. So on Friday alone, I lost $1,000 just Friday alone. As you see right here, as of uh, last week, uh, so no, like last month alone, I was at $75,000 in terms of the road to about the first 100,000. I was at $75,000, and in a matter of 1 week, uh, then I lost I lost about $2,000. So with this, as you see, it's carnage in the market. It's carnage in the market. Uh, with this, it's just not good. It's not good at all. Um, even with down over $2,000 and whatnot, I'm still I still as you see in other videos I go over the dividends and everything that I've received, but as you see, uh, even in the past of this month alone, we're 19 days in. We have different type of dividend reinvestments. I've been honestly buying stocks. Bought. Uh, I've actually bought. I want to say like $650 worth of stock, and so it's kind of leveraging and it's kind of keeping me afloat. Uh, it's keeping me afloat with the volatility of the market going down, but it's definitely not good at all. And then lastly, so in my one of my dividend portfolios, I was at $42,000, and with that alone, I lost $2,000. roughly, or 1,500 uh, in this portfolio alone. And that's dealing with this banking crisis. And so, one of the stocks in my particular in my particular portfolio is I have a couple financial stocks. So as you see, uh, with my diversification, I actually have exposure in the financial sector with the banks, and so I'm I've been thinking where I have T. Rowe Price, Allstate, which is an insurance company, but the two banks I have Goldman Sachs and I have Morgan Stanley, and so uh, knowing where we heading where these three particular banks that had defaults has caused the market to cause the market to go to a spiral. The Fed is going to continue to stay on our necks with increasing interest rates, and then the market has been down uh, a lot for these past several months. So, what's my plan? What I plan to do moving forward? So, what I plan on doing moving forward is, since I have heavy exposure of about five stocks in my dividend portfolio, with the exposure to finance and banking, I'm going to keep Morgan Stanley in my dividend portfolio. And on Monday, first thing Monday morning when the market opens, I'm going to sell Goldman Sachs. So I'm going to sell Goldman Sachs, and I'm going to buy Apple. And I'm going to I love tech stocks. I love Apple. And don't get me wrong. Uh, Goldman Sachs is in investment banking, also Morgan Stanley, and it's no point in me holding both. And so I want to have like roughly $972 in here. I'm gonna park that and to start a new position in Apple, and so that I can get ahead of in the future, get ahead of just when the bull run starts in the future. That's what I plan on doing. That's what I plan on doing. But as right now, as you see, I'm down 1.5%, but that was as of Friday. My portfolio has been down, going down since I want to say Tuesday of last week, and so we had like three days of uh, had like we had like 3 days of the market like going down so substantially, and so next week I'm seeing in my portfolio of about $21 of dividends spread out amongst maybe five different companies that I'm going to be able to see. And so moving forward, I moving forward, I am not going to be afraid of. I am not going to be afraid of this these banks defaulting. I'm not going to be afraid of you know um, just you see all this red in my portfolio. Yeah, our portfolio went down a lot, but I'm going to stay the course. I'm here to motivate you guys to stay the course. Ready if you're still continuing to invest $250 per month, keep doing that. If you're investing $500 per month, keep doing that. I plan on next week buying a share of UNP, which I don't see that right now. Oh, right here. Because Union Pacific is down, so I plan on buying a share of Union Pacific, and then also plan on continue buying a share of Starbucks each check. And right now, Starbucks is under $100. And in my next video, I'm going to talk about five stocks for you guys to stay the course and buy in this uh, market recession. So come back to my next video, and so I'm going to talk about five sure stocks that beat the market that you can park your money into, that you can uh, trust that's going to be there in the long run. So if hopefully this helped and for you to realize why the market is down. The market is really down because of those banks on the West Coast defaulting, and with them defaulting, it has caused a lot of fear into the market, and a lot of people are taking their money out. And so normally when particular fund or stock or any a bank, when there's fear in the market, uncertainty, and when you have customers that um, don't have any type of certainty and they just pull money out of a Apple or this ETF or this bank, then what happens is that the market goes into a frenzy because the market doesn't know what's going on. And when the market doesn't know what's going on in terms of uncertainty, the market will go down. Or when the market doesn't know what the Fed is going to do in terms of, hey, if the Fed is going to increase by 0.25 basis points or zero point 0.5 basis points, guess what? So all in uh, all in all, do not fear. Continue to stay the course. Continue to invest. Continue to buy the stocks wise down. Because remember, when it's a red day and when your portfolio is down, it triggers a sell. Buy more when people are fearful, and when people are greedy. Then if you got the money, then nibble a little bit. Don't go all the way in, and if not, then just ride it out. So I hope you guys enjoyed this video to understand, to see, that hey, even though my portfolios is down a lot, as you see, down $1,000 right here, down another $1,000 in this portfolio right here, uh, down about well, in this portfolio, I'm up $2,000. So I'm up $2,000, but in my other three portfolios, up down over $1,000. And guess what? I'm still optimistic. I'm still uh, believe in dividend investing as a whole. So if I can do it, you can as well. Like and subscribe to my channel, share my content, and just know that we are here. And don't let this recession or down market of several days get you down. Just keep investing. Invest, invest, invest. All right, guys. Enjoy your day.